Hello active traders, and welcome to our TradeMastery.com video channel to help you become a better trader in this upcoming new year for 2018. I wanted to wish you the very best for successful trades in the year ahead. Let's go ahead and take a look at 7 quick tips with the acronym PROFITS, appropriately enough, for our upcoming year ahead to help you stay on the right side of your trades. Coming up now. So when it comes to making your upcoming trading year the best ever, or at least setting some New Year's resolutions, let's take a look at the acronym PROFITS. And I came up with 7 tips that I think can really help you potentially make bigger winning trades more often a way of life. The first P, the first letter P, is for preparation, or to prepare. And by that I mean a couple of things. If you're intraday trading, make sure you look at your S&P futures. Look at pre-market gappers. Look at previous day's biggest gainers. To prepare for swing trading, look at things like 52-week highs, or use some of my alert services like SwingScans.com or SmallCapScans.com to identify candidates that may serve you well for a good upcoming swing trade. So preparation. Have your risk tolerance identified ahead of time. For example, when I go in a swing trade, my maximum stop loss value I want to be under, say, $300. Same thing for intraday trades. I want to keep my stops as tight as possible, so I prepare from both a trade management standpoint as well as a likely charts that are going to run standpoint for preparing to set up my trades for either day or swing trades. Okay. Tip number 2 is to review. And by this I mean you should keep a trading journal or plan. Look over your shoulder and go back over your last 10 or 20 trades and find out where your biggest stop losses were and your biggest wins and what's the difference between the two. So visually review the chart patterns that made the biggest winning trades for you and figure out what the differences were. Review to see if it's something like the day of week. For example, I like to trade Tuesday, Wednesday, Thursdays to initiate most of my trades, and I try and avoid Mondays or Fridays or days right after a holiday weekend. I also like to review the share size or contract or lot size I'm trading. So do review, take a look back at your successful versus unsuccessful approaches, and look for commonalities. Where's things in common between your biggest, more consistent winning trades and all the stop losses, and how do you make a difference in a trading plan moving forward? What can you start doing differently based on a careful, quick, maybe weekly review? So maybe every weekend go back and look over your trades and see if there's any lessons learned and how to make bigger winning trades more often based on what you did right, and how to avoid stop losses based on what you made mistakes in. And oftentimes, by the way, just from one trader to another, I'll tell you, a lot of times you put on trades with the best intentions and you still got stopped out. That's okay as long as you keep a real tight stop, because that's part of trading, is to expect the small unexpected stops, and that's just kind of part of life as a trader. So that's the R in profits. Tip number 3 is to observe visually. Observe not only previous directional trend strength, like which of the charts ran up day after day after day for a swing trade, or ran up for at least 5 to 10 minutes for an intraday trade. Looking at the difference between day and swing trades, I want you to start observing where the repeatable patterns are, where the candlestick patterns and the Western technicals, what volume confirmation, or if you're using a bullish cup or ascending triangles, or an acceleration ramp or other pattern. Observe which charts make for the best trades. I like charts with wide multi-point trading ranges with consistent, tight, clean chart patterns. That's my personal strength, at least my own personal trading style, is charts that have good long directional runs that move cleanly, easily, and I can observe the price action and not only the historical but the implied volatility to take a page from the options playbook that makes sense to trade. So observe, that is our PRO, that's the 3rd tip. The 4th tip is find, F for find the strongest charts out there. Now you can use my alert services like TradingTheOpen.com or SwingScans.com or SmallCapScans.com or ChartScans.com or even BreakoutMastery.com. I've got a lot of different services for the world's active traders, and thanks to all of you for making them so popular, serving thousands of traders worldwide now since 1999. It's been great seeing thousands of folks working with me. And one of the things I urge you to do is find the strongest charts. Kind of like have a strong nose for where the money's going. Also pay attention to your sectors, kind of a bonus tip. As I'm recording this right now, oil has been strong in pharmaceuticals, but the oil sector, crude has been up sharply the last week or two. Find out where these sectors are that the money's going into and find strong charts within the sectors. So you're doing a top-down look at the stock market, what's the directional trend in volatility. You look at sectors within the market, kind of like business verticals, like production and engineering and administrative and sales and the rest of it. Business verticals, look at those like sectors, whether it's pharmaceuticals, retailers, oil or gold or whatever sector you're trading. Make sure that you're looking how to find directional money flow into the sectors that are attracting new institutional order flow, especially important the first month of the year, this month in January. You'll see a lot of capital inflow and outflow in and out of different sectors. Look at your sector charts to find strong sectors, and then within the sector, drill down and find strong charts, or subscribe to my alert services and I do all that, the heavy lifting for you, and I figure out where these things are moving. The I in profit stands for improvement, and I want you to improve your consistency. One tool that I used back when I was a corporate trainer for companies like Ford Motor Company, Rockwell International, McDonnell Douglas, Chevron, Sheraton, other big companies was a flow chart, and you may have seen those on my websites, but do have a kind of a step-by-step process to help you troubleshoot where you're running into trouble, whether it's your scanning or your entries or your exits or your risk management. Whatever you're doing as a trader, I want you to start figuring out how to improve it. So the first thing to look at is think of your trading as a step-by-step process. You're scanning, you're setting your entries, you're managing the trade, you set your exit, then you scale in or scale out based on where the price action's going, and then lather, rinse, repeat all over again. Where in that process are you struggling the most? Maybe you're really good at finding great charts, but you really suck at trading them, right? Maybe, how many of you, this sounds familiar, you're directionally correct, so yes, it is going up and ultimately it does go up, but you got stopped out because you entered too late or too early and your timing was wrong. So maybe timing is a key area for improvement. And again, my services may help you with that to help sharpen your intelligent, thoughtful approach to managing the timing of your entries and exits. But do figure out from a step-by-step process standpoint, where can you personally improve the most? Next to last, the T in profits, the acronym is for test and experiment, and make sure that you trade the two T's, test and experiment, then that should be self-explanatory. Another is trade wide, not deep. As you may have seen my interview with Money Show or my many articles in the industry and everything, you want to trade a basket of instruments. So you're not doing too much allocation or risk on any one trade, but you trade wide, not deep. Or, trade multiple positions with small contracts. So if you're an options trader, that might be 1 or 2 contracts, not 8. Or a stock trader might be 100 shares, not 500 or 1,000 shares. But trade small, make sure you're trading multiple positions and you trade a portfolio. That's the single thing that helped give me turn around my confidence as a trader from back when I started in the 90s was when I started off and I'm trading like 300 or 500 shares, I kind of sweat every single move and I'm constantly looking at the chart and worrying about it. If on the other hand you're trading say a dozen different stocks, you don't really care where any 1 or 2 goes. You get your order confirmation, you put in your initial stop, and then you let it go from there. Once it hits an exit target, you tighten in a trailing stop or you add to a winning trade. But you're trading a basket of instruments intelligently. And that's one thing that builds confidence and also minimizes risk is lighter size. Up to 1 or 2 contracts for options traders or E-mini traders. Up to 100 or maybe 200 shares for stock trades. On the front end initially, you can always scale in or add as it continues to run up for the ones that do. Okay. And last but not least, if you learn nothing else from this video, it is small, the S for small stops, right? Cut your losers quickly and often. Any good trader will tell you that. But I want you, all of us collectively, to make a New Year's resolution to keep your stops as small as possible without getting shaken out. So reasonably tight stops from a volatility standpoint and a strategic trading standpoint as you're testing out entry and exit dynamics and the math behind the trade, right? Trading, as I've said for years, is a lot more about the math and your directional volatility and risk management. It's a lot more about that math than simply chart patterns. Chart patterns, visually, I use chart patterns to help me identify trading ranges and strength of a current directional trend. And that's the most important thing that you get out of the charts, is to scan visually for volatility and trend strength, right? That's important. But more important is the math behind the chart. How do you manage risk? Because you and I both know, if you've been trading any length of time, you always get into charts that look like they're going up, and often you get stopped out because it runs up a little bit and then collapses against you. What do you do in that situation? The best traders in the world, we use really tight stops, right? So we accept that, you may get half your trades that are going to go up and go down, and you still struggle with those. It's how you manage the math on the back end with small stops that makes a difference. So that's the Profits, or PROFITS acronym, with some hopefully helpful tips from a coaching standpoint to keep you on the right side of your trades so you can make bigger winning trades more often, a way of life, as a goal for the upcoming year in 2018. So I hope that this is your best year ever. If I can help you become much tighter in your stops and your risk management, that's the number one thing to get right. The way to get there is to test out with different instruments and play the field, and make sure that you're trying out sensible, intelligent, rules-based trading that keeps you on the right side of your trades and keeps the math and the numbers in front of you at all times. The unrealized P&L, like I said in a previous video you may want to look at, is the most important indicator. Once I get an order fill, it's the unrealized P&L, green or red, or blue or red, up or down. That's the key thing that I pay attention to, because it's my money. I want to protect profit and I want to minimize stops. That's what I do as a trader. So I hope that helps. If this has helped you, please feel free to ask a comment or a question in the area below. Subscribe to the channel, give it a thumbs up if you like it, tell a friend, and until next time, you know the routine: trade with passion, trade with tight stops, play the field, and let's go get them. Take care, and best wishes for success in your trades coming up in 2018. Hey traders, I've got a blast from the past with the 1980s hit from New Order called Blue Monday. If as a trader you've ever had a Blue Monday, my solution is I generally avoid trading Mondays unless we're at a 2-day high, because oftentimes Mondays are kind of hit or miss. But let's go ahead and get underway with Blue Monday on Tenor Sax.
Great job, Ken! You were amazing! Hi traders, we hope you liked this trade mastery video with Ken. Go ahead and subscribe to Ken's YouTube channel and post your comment or question in the area below. Thanks for watching and good trading!